Well, yes, the sugar industry clearly is undergoing a transformation, and most of the listed sugar companies are now translating from traditional cyclical businesses, and they are now venturing into other businesses as well, because the cyclical sugar industry continues to remain a pain point because it is highly cyclical in nature. It is dependent on weather conditions, which continues to remain very erratic, which continues to weigh heavy on the financials of these companies. Sugar sector, remember, is also heavily regulated, whether in terms of pricing, whether in terms of exports, or any other matter for that matter, which is why these traditional sugar companies are now diversifying away from cyclicality into other businesses. We did talk about weather and monsoon risk, which continue to persist, which weighs heavy on their earnings. So these are the three factors which continue to remain at play. Let's also talk about the other opportunities that these sugar companies are now identifying. They are now getting into more and more ethanol production, which the government is now promoting. The E20 program has now boosted demand for most of these distillery companies, which were traditionally sugar companies. Assured ethanol offtake by oil marketing companies on account of government's push on higher ethanol blending is another factor which continues to remain at play. Remember, ethanol has met margins as compared to traditional sugar business, so that is another thing that is more lucrative for the company, and efficient use of byproducts is also another important factor to watch out for. Let's also put the spotlight on some companies which have diversified. Let's put the spotlight on Balrampur Chini, where the company has now gotten into PLA bioplastics. EID Parry is now into FMCG and staples businesses, and Praj Industries is into data centers, SAF, and compressed biogas. So clearly, these traditional sugar businesses are now diversifying into several other businesses.